This Insight session is brought to you by the Banking and Finance Guild. The Banking and Finance Guild is a professional learning and development platform for banking, finance, and fintech professionals. Thank you for joining me in this Insight session where I'll be talking about when things go wrong in banking or a fintech. Let me start with a question. Have you ever opened a banking application or tried to make a payment or called a contact center and everything feels off? The application is slow, balances look wrong, card payments are being declined, and transfers are delayed. And the official message is something vague like we're aware of an issue and we are investigating, which you can interpret as there's something serious going on behind the scenes and we're scrambling to figure out what to do about it. Now, here's what I want you to know up front. When a bank or a fintech has a major failure, the public usually sees a single moment, a single headline, a single screenshot, a single news headline. But inside the organization, what is happening is not one problem. It's a chain reaction across technology, operations, risk, customer service, communications, and leadership. And the reason I'm recording this insight session is simple. If you work in banking or fintech, whether you are in digital, payments, operations, fraud, cybersecurity, technology, delivery, or even frontline roles, understanding what really happens during a breakdown makes you more effective, more credible, and frankly, more valuable. Because in this industry, reliability is not a nice to have, it's a necessity. Reliability is the product. So in this session, I'm going to walk you through what the first 24 to 48 hours actually looks like behind the scenes. Not the polished version, the real version. All right, let's get into it. When people hear outage or incident, they often assume it's a technology failure, and sometimes it is. But in banking and fintech, failure can mean a few different things. A digital banking failure, mobile or internet banking is unusable. A payments disruption, so card payments, transfers, direct debits, or clearing systems aren't working. A customer data issue, for example, balances, transactions, or account views are incorrect. A process breakdown, for example, onboarding stalls, identity checks are failing, and approvals jam up. A fraud spike or control issue where the bank needs to slow or stop certain activity, or a third-party failure, such as a vendor, a processor, a cloud provider, or a communications issue. And here's the key point. Customers experience it as one thing. My bank or my fintech isn't working. But internally, it shows up as dozens of signals that often conflict with each other, which brings us to the first reality of the first 24 hours. Let's talk about detection. People assume that banks and fintechs have a giant alarm that goes off the second something breaks. Sometimes they do. But in reality, detection is often messy and delayed because signals come from different places. It could be a monitoring tool that might show that the system health is fine while customers are furious. For example, tools like New Relic, Dynatrace, or Datadog might show green dashboards, low error rates, acceptable response times, and no major alerts. But at the same time, customers are on social media saying they can't log in, payments are failing intermittently, or balances are not updating correctly. It could be a contact center sees call volume spike before anyone in technology is sure of what is happening. Social media explodes before internal incident channels even light up. A product team sees drop-offs and error rates but cannot immediately pinpoint. The fraud systems might suddenly block transactions and create what looks like an outage, or third-party providers might be slow to confirm they have an issue. So early on, you have two parallel worlds. World one, where the dashboards say it's okay, and world two, where customers are telling you it's not okay. This is where panic starts to happen, because if you cannot measure it cleanly, you cannot confidently explain it. And if you cannot explain it, you cannot control the narrative. Now let's walk through the first 24 to 48 hours in a chronological, real-world way. There are essentially four stages: initial confusion, speed versus control tension, decisions with limited clarity, and the key roles that are involved throughout the cycle. Stage one, which is initial confusion. The first phase is confusion. People are asking, is this a real incident or a false alarm? Is it limited to one channel or across multiple channels? Is it customer impacting or internal impacting? Is money at risk? Is customer data at risk? And ultimately, is this even a priority for us given the 1001 other things we are dealing with right now? And you usually do not have clean answers early. You have partial information from different teams and it doesn't align. It's a bit like a battle zone when you've been hit by artillery shells and in the aftermath, with your ears ringing and smoke and debris in the air, you are thinking, what just happened? Stage 2, which is the speed versus control tension. Now, here's a point that only makes sense if you've lived inside a bank or a fintech. In a siloed organization, different teams see urgency differently. There is a real-time conflict where different teams see urgency through different lenses. For example, a database team might see we have some errors we are investigating. A middleware team might see traffic is high. A product leader might see the application is broken and customers are leaving. We need to fix this. I know this from first-hand lived experience. A contact center sees agents are getting abused and queues are blowing up. A frontline team sees customers are in branches or on chat demanding answers. And someone in risk sees do not make changes without approvals and evidence. This needs to go through the change review board, which only meets on Mondays each week. So the tension becomes move fast to restore service versus move safely to avoid making it worse. And this is not an academic debate. It's a real-time conflict that defines the first day. Then there's stage 3, where decisions with limited clarity exist. Here's what leaders have to do early. They make decisions before they are even certain. Those decisions are not about optimization. They're about containment and confidence. Containment, stop the problem spreading. Confidence being show internal and external stakeholders you are in control. Examples include, do we disable a feature to stabilize the platform? Do we slow down payments to reduce risk? Do we block certain transaction types temporarily? Do we roll back a recent change? Do we declare a major incident formally? Then there's stage 4, which is about mindsets, not job titles. In these early hours, the most useful way to think is not teams, it's mindsets. It's about the focus that people can bring to what can be a highly stressful, sometimes chaotic, and time-critical situation. You will see operation stabilizers, people who think, keep the machine running, keep customers moving. Risk and control guardians, people who think, do not create new exposures, document decisions, maintain governance. You've got technology responders, people who think, find the root cause, restore service, and protect data. You've got customer-facing leaders, people who think, what do we tell customers right now? What do agents say? What do we post publicly? And then there's leaders magnifying exposure, people who think, how bad is this? Who needs to know? What are the regulatory implications? And by the way, all of these mindsets matter. None of them are less or more important than the other. Failures get worse when one mindset dominates and the others get ignored. But the greatest challenge with some of these mindsets is they become siloed. They only see things from the perspective of their role remit. They don't see things from a broader customer or bank or fintech reputational or ecosystem viewpoint. If an incident lasts more than a short period, something predictable happens. People get tired, not just physically, but cognitively. And this creates what I call escalation fatigue. Escalation fatigue is when every update feels urgent. Every team is escalating to every other team. Everyone is asking for answers you do not have yet. And the incident channel becomes noise instead of signal. This is where coordination becomes the product. The organizations that recover well are not always the ones with the best technology. They are often the ones with clear incident leadership, clean decision-making, strong communication rhythms, and disciplined change control even under extreme pressure. Let's ground this with some real examples across TSB, Monzo, National Australia Bank or NAB, and Revolut. Example 1, customers see the wrong thing at TSB. One of the clearest public examples of a failure that turned into chaos is what happened at TSB, a large retail bank in the United Kingdom serving millions of everyday banking customers. Customers reported problems accessing accounts and in some cases seeing incorrect balances or even other customers' information. Now notice what that triggers inside a bank. This is not just an outage, it's a trust failure. It raises data privacy concerns. It raises operational resilience questions, meaning you can keep critical services running under stress, and it becomes reputational risk immediately. So the first 24 to 48 hours in a scenario like this is not just technology recovery. It becomes customer harm assessment, containment of data exposure, messaging coordination, and leadership level crisis management. Example 2, which is Monzo, a United Kingdom-based digital bank, published a transparent breakdown of a major service disruption, explaining that a systems change did not go according to plan and it impacted services. Whether you're a bank or fintech, here's the lesson. Many major failures start as normal work, a release, an upgrade, a configuration change, or a routine deployment. And then under load, something behaves differently than expected. This is why disciplined change management matters even in fast-moving fintechs. And yes, change management sounds boring, but it's the difference between a small issue and a headline. The next example is National Australia Bank. National Australia Bank, one of Australia's 4 largest banks, experienced a major service disruption that was publicly reported as being linked to a domain name system issue. The domain name system, or DNS, is essentially the internet's address book. It helps systems locate and communicate with each other. The reason this matters for your career is it shows how a single point of failure, sometimes something unglamorous and invisible, can take down mobile banking, internet banking, contact centers, and parts of payments processing. And inside the organization, the incident becomes what failed? How did we not prevent it? How do we restore safely? What do we tell customers? What do we tell regulators? What controls failed? And how do we stop this happening again? And the last example is Revolut. Revolut, a global digital banking and payments platform, openly described service outages where a third-party payments processor experienced latency, leading to card payment failures for customers. This one is important because it kills a myth. A fintech can have a brilliant product design and still fail because a dependency fails. And this is why modern banking and fintech capability includes third-party risk awareness, vendor management basics, and designing for resilience, meaning your service degrades gracefully, not catastrophically. But the thing I really like about Revolut and others like them is their transparency. They aren't like little children hiding away from their parents because they've done something bad. They admit when things go wrong, and they are happy to help others like you and me learn from their mistakes and how they dealt with them. In short, customers feel pain. Institutions need to manage the risk. The role of banks and fintech here is to understand the customer pain and deliver solutions as quickly and safely as possible. Risk management is essential. Customers experience failures emotionally. Fear, such as, is my money gone? Anger, why can I not access my accounts? Anxiety, is my personal information exposed? And frustration, why can no one tell me what is happening? Banks and fintechs manage failures structurally. Operational risk, what harm occurs? Conduct risk, did we treat customers fairly? Compliance risk, did we follow obligations? Reputational risk, how does the public interpret this? And financial risk, compensation, losses, and remediation costs. This is why customer communication matters so much, not because it looks good, but because unclear communication amplifies harm. When a failure happens, there is also a huge amount of work that is not visibly external. It's the analogy of customers only see the tip of the iceberg, which is just a small percentage of what actually happens within the day-to-day work of a bank or a fintech. Behind the scenes, there's a lot of work that needs to happen, which when you work in banking and fintech, you see firsthand. This means assembling incident timelines, documenting decisions, confirming what data is accurate, reconciling transactions, checking for fraud attempts during instability, triaging customer complaints and hardship cases, preparing post-incident reviews, and identifying control gaps. This means doing the full process of a post-incident review. A post-incident review is a structured reflection where teams capture what happened, why it happened, what worked, what failed, and what changes will prevent recurrence. This is where careers get made or damaged, because if you handle the aftermath well, you build trust internally. If you handle it poorly, you become the person associated with chaos. Here's a strong statement. Most major failures are not purely technology failures. They are system failures, meaning unclear ownership, weak controls, poor communications, rushed change, fragile dependencies, incomplete testing, misaligned priorities, and weak escalation pathways. Technology is often where the failure shows up, but the root causes often sit in governance and operating models. Operating models just means how the organization actually runs day to day, including who makes decisions, how work flows, and how accountability works. Now, here's the part that matters for your career. When hiring managers look at candidates in banking and fintech, they are often asking, will this person operate safely when things go wrong? Because things do go wrong. So what do they look for? Not perfection, They look for signals of capabilities, such as thinking in systems really matters. Systems thinking means understanding that no part of a bank or a fintech operates in isolation. Technology, operations, risk, payments, and customer experience are all tightly connected. And if you can grasp and understand the full system at play within a bank or a fintech, then you are a compelling bank or fintech talent. Understanding customer impact, understanding risk and controls, communicating clearly under pressure, working cross-functionally, and making decisions with evidence. This is why people who understand incidents and operational breakdowns often progress faster, because they understand the bank or a fintech as a living ecosystem, not a set of isolated functions. Before you go, let me leave you with one final reflection. Everything we've covered in this insight session shows what really happens when a bank or a fintech comes under pressure. Not the polished version, not the theoretical version, but the reality, where systems collide, information is incomplete, and capability shows up very quickly. What becomes clear in those moments is this: banks and fintechs do not just access what people know. They access how people think, how they respond, and how safely they operate when things are not going according to plan. And this is why two people with similar experience can be viewed very differently. For many professionals, the real challenge is not learning. It's this question: how do I make my capability clear in a way that banks and fintechs can actually recognize and trust? Because you can gain real-life skills through experience and courses, but if that learning appears fragmented on paper, hiring managers often struggle to interpret it. They're not trying to judge effort. They are trying to reduce uncertainty. This is where structured capability pathways matter. A structured pathway simply means your learning is organized and mapped to real-world competencies, the same kinds of capability areas banks and fintech use internally to assess readiness for roles. So instead of looking like a collection of disconnected courses, your experience tells a coherent story: what you understand, what you can do, and where you are heading. That exact challenge, making capability coherent and legible, is what led to the creation of the Banking and Finance Guild. The Guild is a professional learning and certification platform designed to help banking, finance, and fintech professionals translate learning into clearly signaled, role-aligned capability. Right now, the Guild is live with its first certification pathway, the Digital Banking Specialist, built around practical competencies spanning digital banking, payments, risk, cybersecurity, technology, operations, and delivery. What's important to understand is that this certification isn't about collecting another badge. It's built around the competencies that banks and fintechs consistently value and reward in hiring decisions, aligned to what leading institutions around the world expect from their people. Importantly, it's designed to recognize learning you may already have completed, including relevant Udemy courses and other learning platform courses, by showing how that learning maps into a structured, credible pathway. The Guild is actively developing additional role-based certification pathways over time across areas such as retail banking, corporate banking, payments, risk and compliance, operations, and financial crime. If you'd like to explore what is currently available, see how your existing courses map into the pathways, or register your interest in upcoming certifications, you can visit www.bankingfinanceguild.org. You will also find the link below in the description. And finally, I've included a link to download the session notes so you can keep the key frameworks, examples, and insights from this session in one place. Thank you for taking the time to watch this session. I hope this insights session gives you greater clarity, stronger confidence, and a more realistic understanding of how banks and fintechs really operate when pressure hits.